300 billion crypto price crash suddenly accelerates as Bitcoin, Ethereum, and XRP traders brace for a Fed shock. Evaporating US Bitcoin ETF demand sends token to a 2-week low. The crypto market lost 400 million and Bitcoin had its worst day since the FTX collapse. Now, if you go onto Google or if you look on CNBC, Fox News, Sky News, any of these media outlets, what you will see is a bunch of lies and manipulation and unbalanced view. A lot of them are talking about crypto crashes, collapses, and what that's doing is making people like yourselves sell Bitcoin, not accumulate Bitcoin, and in doing so, you're going to miss out on a lot of money when the bull run really does get started. There's a ton of lies, a ton of misinformation out there, and you have a lot of people now who are not fully equipped with the information that they need to go ahead and make very wise decisions for themselves and their future by accumulating Bitcoin. We have hordes of retail investors like yourself who have now exited the Bitcoin market on misinformation by the lies and the corruption of media outlets like this. In fact, they couldn't even get the story straight here. You got one saying it's a $400 million crash in crypto. Another saying it's a $300 billion crash. Listen, guys, this is what you need to know. Okay. This is 2016. This is the Bitcoin chart of 2016. This white dotted line right here, this is when the halving event, the Bitcoin halving event took place in 2016. Okay. Took place in 2016, the 9th of July, 2016. Long time ago, but it is very important for what is going on right now. As a matter of fact, it is this. If you need to know one piece of information about Bitcoin right now, it is this and only this. Bitcoin goes for a halving event every 4 years. This is the most significant event in Bitcoin's history because what it does is it cuts the new supply of Bitcoin into circulation in half. Currently, there are 900 Bitcoins that get released into circulation every single day. So 900 today, 900 tomorrow, 900 yesterday. That number is going to get cut in half to 450. Now, in doing so, if you reduce the supply and you have the same amount of demand or more demand, the asset becomes more valuable. Simple as that. Simple microeconomics. Simple. So, the halving event is coming up in 27 days. We have currently seen a move down in the price of Bitcoin. Now you have the news articles lapping up what's going on right now, pushing out these lies to the market, crashing crypto, collapsing Bitcoin, without putting out the full information that people need to know, right? 2016 is the most similar to what is happening right now. Yes, it was a long time ago, right? It's 2024 now. 2016 was a while ago, but it serves the purpose of we can look back in time at 2016, see what happened, and use it as a good gauge and understanding as a predictive measure of what's going to happen now and in the future. So in 2016, we saw Bitcoin make a high, which is what Bitcoin did very recently, a couple of weeks ago. It put a high of 74,000 in, and then we saw a collapse a crash, a decline in Bitcoin of 30% back in 2016. Sounds quite similar to what's going on right now. We had a rise in Bitcoin. We're now seeing a decline, a drop in the price of Bitcoin. Its peak was just over 16%. And bear in mind, we have this halving event in 27 days. It's this white dotted line for reference, 27 days. So it's very similar to what happened in 2016. Why did this happen? This happened because in markets, we get this sell the news type of event. This is where people see a news, or in this situation, people very well know the exact date of the halving. And before that, we have people who are going to sell their position because they're not sure of which way price is going to go. So they don't want to take that risk. And we're talking traders here, short-term positions, or those who kind of just FOMO'd in. They are going to know that halving event is coming up in a couple of days' time. And because of that, it makes them sell their position or wait on the sidelines or take their profit. And in this case, there's a fair bit of profit taking going on because we have seen a substantial rise in the price of Bitcoin. And that's why you're getting this pullback. It makes 100% sense. We saw a much bigger decline back in 2016. That's natural. It was a much more volatile asset back then than what it is now. So it's half the decline that we've seen versus 2016. The key thing is though, after the halving event, yes, we did go for another decline. You can't really see it here, but we did go for another decline. Price dropped 40%, okay? Peak to trough 40%. So it had a first leg down before the halving, second leg down after the halving. These are key things, right? These are two very key events in history that we can use as a predictive tool of what's going to happen. And what is happening? Then what we saw is at the end of the bull run, which took another 18 months from that halving date back in 2016, the price of Bitcoin quadrupled, times 4. But back in 2016, you would have got the same articles as we're seeing today. The crypto market lost 400 million. Bitcoin had its worst day since FTX collapsed. That's the key. They didn't have the intelligence, right? But you do. So what we're going through right now is a very natural cause of events, and we've seen it play out back in 2016. Natural drawdown. Those who hold through the drawdown will be rewarded massively as the bull run starts. I didn't say continues, I said starts. Halving event is only 25 days away. You hold through the volatility, you continue to accumulate, you will be rewarded. It's as simple as that. If there's anything about Bitcoin that you need to know, is what I've just explained here. This is all you need to know right now. It puts everything into context. It calms the nerves and it keeps you on track and on course of what you need to do to put yourself in a very, very good position to take advantage of what's going to happen to Bitcoin in the very near future. Okay. This is something that I've been talking about ever since Bitcoin was at that all-time high of 73,000. I did say you're going to get this decline pre-halving, and that's all we're seeing right now. But there's no news outlet, no Fox News, Sky News, Bloomberg, CNBC, BBC. No one's going to tell you that because they're not putting out the right information so that collectively everybody can succeed. So that's the situation that's going on right now. And that is why we're seeing a decline, a very healthy, a very much needed drop in the price of Bitcoin, which will produce very lucrative results for those who buy through this very small drawdown that we're going through right now. 400 million in crypto, it sounds crazy, it's not. It's a very tiny decline in the price of Bitcoin that we're experiencing right now. A very small decline. As I've said before, the market is going through a natural cleansing event. These cleansing events happen, and they must happen, because otherwise the market doesn't want everybody to succeed all at once. That's just how it's designed. The market is designed to create maximum pain, and that's what it's doing right now. As Bitcoin was climbing through the 60s, 61,000, 65,000, 68,000, it was very easy to just buy, hold, and be in money the very next day, the very next hour, the very next minute after buying Bitcoin. So we have to go through these liquidation events. And what it's doing right now is it's just purging those who jumped in right at the top. And we have seen this $400 million in liquidations. We've seen $1 billion a few weeks ago. We saw $500 million a couple of days ago. These events are just natural, and they happen on both sides. We saw that happen to the shorts. Now it's happening to the longs. But remember, if the market is going to create maximum pain, what is coming next for the price of Bitcoin? Where if we're seeing liquidations happen to those that went long, if it's going to create maximum pain, we're going to see liquidations to those that are going short. Because you're going to have a ton of shorts that are piling on right now, expecting the price of Bitcoin to fall to $30,000, which is not happening. So what's the market going to do? It's going to burn them. It's going to burn them like pigs. So we're going to see the price of Bitcoin very soon go ahead and fry the shorts. Again, another liquidation event. These are just natural courses for Bitcoin and in markets in general. But here's the thing. This decline that we've seen in Bitcoin of 16% is tiny. It is very, very small, right? 400 million sounds crazy. Oh, $400 million crash. It's small in the grand scheme of things. In the last bull run, Bitcoin went from the price of 8,000 to 68,000. Massive jump over a couple of years, 2020, 2021. In that time frame, we saw eight corrections of 20% or more. Some of these corrections were 30%, some of these corrections were 50%. 8 corrections of 20% or more. We haven't even hit 20%. It's a 16% move that we've seen. That is tiny. So these moves that we see, they are buying opportunities. They are an opportunity to add to your position, to start new positions, because ultimately they will end up being very lucrative allocations that you're making right now. So if you are not looking at Bitcoin in this $400 million crash, you are doing it wrong. You must take a look at this. You must add to your positions, because this puts yourself in a position to win big in the next chapter when Bitcoin does start that bull run. On the other side of the halving event, once it's done purging all these and doing all these liquidation events, price will move and you'll be duly rewarded. But you must know this information. Okay, this is what happens to Bitcoin. This is what happens in markets in general. But we have a lot of information here that you can use to your advantage. 8 declines in the last bull run as it went from 8,000 all the way up to just under 69,000. Of 20% or more. Current move we've seen is less than 20%, it's 16%. Now, that's normal for us to see a decline, a pullback, a shrinkage in volatility versus last year. Yes, because we have a whole new pool of investors, a whole new army in Bitcoin right now that we didn't have back then, that is reducing the volatility. And that, of course, is the institutions who have entered into Bitcoin through the spot ETF. This is the type of information you must know, not this type of information where it's saying the crypto market lost 400 million. This is manipulation, okay? This isn't the type of information that puts you in the best position. This is surface level stuff. This is an unbalanced view of what's going on right now. You must know the truth, and with the truth, put yourself in a very, very sweet position. This is interesting. Stable coins have clocked in a new high of over $140 billion. What does this mean? Well, stable coins, these are just pegged to, your dollar, your fiat currency. But in simple terms, when people go to buy cryptocurrency on exchanges, they will transfer their dollars, their pounds, their euros, their Zimbabwean whatever into stable coins so that they can go ahead and buy cryptocurrency. So if there are $440 billion or 140 billion in stable coins sitting on exchanges, what does this mean? It means that you have a lot of capital ready and waiting to get injected into the crypto market, to get ready and injected into cryptocurrencies like Bitcoin. So right now there is billions and billions and billions waiting on the sidelines that will get released into the market. Because it's not released right now, we're not seeing that explosion in price of Bitcoin to 80,000 to 90,000 to 100,000. Of course we're not seeing that right now. Of course we're not seeing it because we have so much capital in stablecoin. Once you get that release, once you get that injection, it's like fuel on the fire. Then you're going to start, then when this number starts coming down, okay, when it starts moving down to 100, 120 billion, 110 billion, then you're going to start see the commencement of the bull run in Bitcoin, in cryptocurrency. Now, this will happen after the halving event. So once this halving event is done, then you're going to start to see the release of the stable coins that are just sitting idle doing nothing. And once they flow into the crypto market, then you're going to get that almighty explosion that we are all waiting and looking forward to. But until then, as the stablecoin sits $140 billion strong on the exchanges, of course not. Of course you're going to see a decline in Bitcoin. Of course you're going to see a crash of 400 million. Yes, because we haven't put the fuel into the fire yet, but it's coming. It's coming. I'm just giving you guys a timeline, letting you guys know the full picture of exactly what's going on here. $140 billion, new high in stablecoin. That is massive. That is a huge amount of capital to be injected into cryptocurrency. And of course, it flows first into Bitcoin, and then it makes its way over to alternatives. Now, one of the articles said, let me get this right. Evaporating US Bitcoin ETF demand sends token to a new 2-week low. All right, this is Bloomberg, okay? This was Bloomberg trying to get you to sell your Bitcoin and to sell it to me and to sell it to Michael Taylor, but I want you to keep it because it will serve you well. What's the true picture here? Okay, the false picture is that the ETF demand is drying up and it's the end of Bitcoin as we know it. No. This is what is happening, okay? We have 9 ETFs that have newly been... All right, let's backtrack. For those that are new, for those who have forgotten, for those who don't understand. What is the spot ETF? The spot ETF was a new introduction this year into this whole ecosystem of cryptocurrency, particularly Bitcoin. Basically, it allows those who couldn't access Bitcoin before via the means that we are used to and familiar with, i.e. buying it on exchanges like Coinbase, like Gemini, like FTX. And it now allows them to buy cryptocurrency effectively through the stock market by just buying the ETF. Okay. So this isn't going to be for me and you. We'll just go to exchanges still. This is going to be for your institution, your institutional investors, okay, your asset managers, your boomers, the guys with gray hair, those types of guys, those types of people who are not well versed with using exchanges, or who just can't from a regulatory perspective. So it's open the tap. So a new pool of investors, a new pool of participants have come into the crypto ecosystem. Amazing. We love it. Now, there are 9 of these ETFs. There are like 10 of these ETFs that offer this service. One of them is basically, the assets from the ETF are getting their outflows. They're seeing outflows. So people are selling. Why are they selling? Because they've got high fees and nobody wants to pay high fees. Why would you pay high fees when the other 9 have lower fees? So they've just been selling off, and they're called Grayscale. But the other 9 have just been stacking. The most important being BlackRock. So you've got Grayscale selling off. That's fine, right? Their fees are high. That's natural. And the others have been stacking. So buying all of the money that's been coming out of Grayscale, and all the Bitcoins have been coming out of Grayscale, the others have been stacking, accumulating that and more capital on top. Now, Bloomberg have gone and said, evaporating demand for ETFs. You read that, you'll think, oh no, institutions are selling. Oh no, the asset managers are selling. Oh, this must be the end of crypto and the end of the bull market. Now maybe I should sell. No. What is actually going on here is Grayscale in the last 2 days have had massive outflows from their ETF. Fine. They can go to zero for all we care. The others will just consume all of their outflows. BlackRock will just eat up anything that leaves Grayscale. But the key thing is here, all the others have continued to see net positive days. That is huge still. So even in the decline, so even in this 13% drop, you still have the institutions, you still have the asset managers still continuing to put money into these ETFs. It's just we're seeing a decline from one, but none of the others have had. BlackRock has never had a day of outflows. It's just had net positive inflows every single day since launch for 45 days or whatever it is now. Every single day. Bitcoin rises, inflows. Bitcoin drops, inflows. What does this mean? It means that the core base of investors that are buying the ETF through BlackRock, they don't care about these small term fluctuations. They don't care about Bloomberg saying this and that is happening, 400 million liquidation event crashes. And they don't care about none of that. They see the bigger picture here and they understand the bull run hasn't yet started, and they're putting themselves in a position right now to double, triple, and beyond their money, which is exactly what you need to do. So they're seeing continuous net positive days. Now, what's happened in the last few days, even though if you look, you can't actually see it here, but the last 2 days, right? So you see this green, all this green at the bottom. These are net positive days. The last 2 days, they are red bars. Not that big, but they're red bars. I'm in the way, so you can't see it. Let me move myself. Okay. Now you can see it. 2 small red bars. This is what Bloomberg is making all this fuss about, but let me explain. Grayscale, which is the blue above, right? In the last 2 days, they've had pretty big outflows. Not their biggest outflows, but pretty significant outflows. All it means is that BlackRock yet hasn't consumed all of it, but they will. That's it. So BlackRock and all the other ETFs, they probably consume maybe half of their outflows. They're just waiting for the other half. They'll consume the other half, maybe today, maybe later this week, but they'll consume it at some point. They just haven't done it yet. That's the only reason why we saw a net outflow in aggregate across the ETFs that Bloomberg has made this big deal about and has made people like you sell your Bitcoin, which is a terrible move, because sooner or later BlackRock will just go ahead, consume all of it, and you're going to get a massive green day. Story will flip, halving event will be done, Bitcoin will start flying, and then you'll be crying that you didn't just hold. The worst thing you can do right now is know the information and not act accordingly, not act right or make a mistake. It's very easy to make mistakes in times like this, where you've got CNBC, Fox News, Bloomberg, whatever the case may be, coming out and saying these lies and manipulating you, moving you off center. I had a question actually in the last live stream. I'm going to address it now. You guys leave your questions down below and I'll definitely address them. Someone asked me about MicroStrategy. Now, if you don't know, in this whole crypto space, MicroStrategy is a big deal. Why? Because there's this guy called Michael Saylor, and he runs MicroStrategy. And they are the largest, or he as a single entity is the largest owner of Bitcoin, right? He owns like 1%. If you take out like the founder and everything who owns like 20%, no one can find where he is. He's kind of just hiding in a cave somewhere. He owns 1% of Bitcoin, over 200,000 Bitcoin. So he's a big deal, right? If he was to sell all his stake today, you would get like a 15% decline in Bitcoin. So he's a big deal. But anyway, look, his plan is to hold this thing, continue stacking. I don't know how many Bitcoins he wants to have. He wants all of them, right? He wants to collect all of them, but he can't have mine. And he shouldn't have yours either. Someone said, what about MicroStrategy? Should you buy this? All right, so this is the stock of his company. My question is, my thought after reading this was, what is the reason for looking into this? What's the reason for wanting to own MicroStrategy? Because effectively, because he's just buying Bitcoin, that's what he's known for, number one, most known for. And number two, his company is very well, they actually do other stuff, right? But they're very well now linked to Bitcoin and the Bitcoin price. So when Bitcoin drops, MicroStrategy will drop. When Bitcoin rises, MicroStrategy will rise. If you look at the price of MicroStrategy, if you look at the chart and the movement, it looks exactly like Bitcoin. In fact, let's just see what the price decline from the high to the low is. So it's a little bit more. So it's a bit more volatile than Bitcoin. So this is what I was going to say. So right now, it's dropped about 20%. Price a bit over that 22%. Price of Bitcoin dropped 16%. In terms of ownership, because this is linked to Bitcoin, it moves and acts like Bitcoin, but it isn't Bitcoin. It's effectively a second derivative of Bitcoin. So if you wanted Bitcoin exposure, you might as well just buy Bitcoin. There's no need to buy MicroStrategy, because number one, there's no guarantee that, let's say Bitcoin doubles from here at the end by the end of the bull run. Okay, 2025 summertime, full time, Bitcoin is double from the price it is today. There's no guarantee that MicroStrategy's price is going to be double. Okay, that's number one. Number two, this guy could, I don't know, get hit in the head, completely change his course of action and plan, with a very small probability of that, And next thing you know, you're holding something that doesn't have the same, you don't have the same reason now that you did when you entered into it. So because it's a second derivative, there are all these other additional variables that just don't make it an attractive investment proposition if all you wanted to do was get access to Bitcoin and exposure to Bitcoin. So that's my take on this. There's no need to own this or hold it. The only useful tool I see in this, only useful tool I see is that if you wanted to if you wanted to start trading, if you wanted to have option-like volatility with Bitcoin on the stock market, this would be the go-to, because you can't trade options on your ETFs right now. That is coming though. So because this is linked to Bitcoin, moves like Bitcoin, if I wanted to go long on Bitcoin with option volatility and option leverage and get option-like returns, then yeah, I guess I could look at this. That's the only reason. That's the only reason. But that's not going to fit most people. That's going to fit a very small percentage of people. But in terms of stock ownership, there's no point. As that was the live stream for today. Some people have been asking me about the miners, okay, the miners, and I am going to start doing these longer videos between Friday and Sunday where I'm just cooking straight for 1 to 2 hours, and we're going to be talking about stuff that only has the opportunity to double or more, 2x, 3x. Now obviously that comes with volatility, that comes with a bit of speculation, but that's the plan. Hopefully I should get that out by Friday to Sunday, and it will include miners. I know a lot of people are asking me about that. Other than that, guys, drop me down in your comments below, and I'll catch you next time.